Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Monday buys video. So every week I add brand new equity into the Roth IRA in order to max it out for the year 2019. This also helps by reinvesting cash that's currently sitting on hand. Here we only have 1 cent sitting in hand. That is because last week we had dividends get paid out, which they became over $10, which M1 Finance automatically reimbursed for us. So we're going to be going over what stocks were bought last Monday. We're going to go over what stocks paid out those dividends and where those dividends were reinvested into. We're also going to be covering what stocks I am buying this week. If you listen to the weekly recap, you know that healthcare sector as a whole got slammed, and I'm really interested in reinvesting into some of these stocks here that took a 3, 4, 6% dip here just within just a single week here. So if you are brand new to the channel, I do make videos covering the stock market, dividends, real estate, entrepreneurship. If you're interested in any of that, definitely hit that subscribe button. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments, questions at any time in the video, drop it in the comments section. If it's multiple questions, I always read and reply to all of them. So let's go ahead and get into the video. So last week we had dividends get paid out, but M1 Finance, the way that it's currently set up for funding is if any of the cash exceeds $10, I will automatically reinvest that cash back into the portfolio. So if we take a look at the activity, we had two things going on here last week. On Monday, we added our initial $115.38 on into the portfolio. Now, we also had Essex Property Trust pay out $3.16 last week on Monday. That totaled $118.54. All of that was completely invested into the market, and I targeted only one stock last week. That was Walgreens. Walgreens had been getting hit, and it actually performed really well this week in comparison to the entire healthcare sector. You can see the only healthcare company here that kind of basically did pretty positive was Johnson & Johnson. Walgreens, also sort of that pharmaceutical drugstore company, but it is positive for the week, 2.23%. And basically anything, whether it's drug manufacturer, biotech, medical appliances, or so on, it was mainly negative there for the week. Now jumping back over here, so we had that 118.54 get reinvested into Walgreens, and in the middle of the week we had a bunch of dividends get pulled in. So on top of that $3.16 from Essex Property Trust, we also had WP Carey paying out $7.75, 65 cents from Main Street Capital. Both of these are real estate investment trusts, but only Main Street Capital is a monthly paying real estate investment trust. And then we had Cardinal Health getting paid at $3.43. So total last week in dividends, we made about $15, a little over $15 in just straight dividends, and all of that was reinvested into. Now again, M1 Finance is currently set up to automatically reinvest those dividends, so it targeted 0.26661 shares at $11.89 of CenturyLink and 0.09922 shares of Medtronic at $87.18. Now 317 in CenturyLink and 865 into Medtronic. M1 Finance makes these purchases based on the equity of the portfolio or the position in comparison to the total target that you have set for that specific stock. So on the main screen here, if you take a look at the target and gain, down here towards the bottom, Medtronic meets equity wise, it should be 1% of my portfolio, which is the target on the bottom, but Medtronic is only 0.2% of the total portfolio. And down here towards the bottom, we can see that CenturyLink, it was probably 0.01 or 0.02 still, and its equity is supposed to be targeted at 1%, so it saw that both of these are at 0.02 in comparison to the next runners up, which are maybe Coca-Cola here at 0.03, and it instead chose to just invest in those two specific companies. So that's kind of the way that M1 Finance automatically reinvests dividends, not by doing DRIP, that dividend reinvestment program, but it does FRIP. It basically fractionally reinvests your dividends back into your portfolio automatically based on your current equity and the positions to your target percentages. So if you're interested, I've covered a video back in the past of how M1 Finance does its reinvestment. It's not dripping, it's fractionally reinvesting those dividends. Now, we've covered how much cash we have on hand, what dividends were paid out last week, where the capital was reinvested into. Now, what stocks am I buying up this week? Now, in the last week, we had some pretty even performance here. We can see here we're basically flat for the week. That is because we had a bunch of financials, tech, industrials, and consumer goods basically kind of keeping the portfolio positive here, with JP Morgan being the winner last week. But we also had half of the portfolio down here towards the bottom. We had our utilities. So both of our couple utilities in here, Consolidated Edison, they were negative. Real estate investment trust also went negative. You take a look at most of the real estate investment trusts that are out there, most of them were negative here. Also, healthcare got slammed. So our worst performing, or my worst performing positions here in the Roth IRA were the real estate investment trust and the healthcare sectors, all down here around 3 to almost 7% there for Pfizer. Now, of the portfolio, I've been interested in just a few here. I'm interested in buying more shares of AbbVie, continuing to buy back more, or just buy into more shares of Walgreens due to its current equity. Medtronic is also one of my new additions to the portfolio. It creates medical appliances and equipment. And then we have Cardinal Health here, drug wholesale. So all of these have been growing and paying out dividends for multiple years, with Cardinal Health being at 14 years, which is one of the lower of the four. Everything else here is nearly at 40 plus years, and all of them do have payout ratios less than 60%. Now, I did want to kind of take a look at how these companies have been performing just really quickly with you guys. The revenue, net income, free cash flow for these specific companies over a 10-year period, just in percentages here. So Walgreens here, we can see that their revenue up in the blue here, 118. In the red, we have their free cash flow up 179 over the past 10 years, and their net income up 155. Medtronic here, also all positive across the board. Revenue, net income, free cash flow, moving in a positive direction over the past 10 years. You can see that their net income did do a recent dip here back in 2018, but that was due to tax reform and changing a little bit. You'll see a couple of these companies, Johnson & Johnson, for example, would show a bit of a dip there in 2018. Now, Cardinal Health, this one is a bit funky with their net income. This is showing them down 103%, and you can see here, this is after that 2018. So this may be due to the way that they're doing tax reform. They may have had like some sort of a large purchase where they wrote off more against their income versus what they took in. So they may have depreciated some of their assets a little bit different. So that's why this took such a deep cut there. And then AbbVie here is our last one here, and hopefully this should load here in just a second. And this will kind of show you the performance of revenue, net income, free cash flow here for AbbVie. Now, kind of removing their percentages back to normal, and we can take a look at their current price to their 200-day and 50-day moving averages here. We can just take a look at them over the past year. We can see here, let's just go 5-year performance. I'm not sure if that may be too long to kind of get an idea of where this, yeah, okay, so here, that's actually not too bad. So here, we can see that Walgreens down at $54.63. We already saw its financials. Their financials have been in a positive direction over the past several years. There has been a little bit of a worrisome from Amazon going into that whole pharmacy and healthcare sector. So Walgreens has been taking a beating here recently, but it's just, it's one of those stocks and companies that has been growing and paying out those dividends. It's also good as far as its financials. And as far as valuation goes, where it's below 250-day moving averages, it meets all those little sort of mini requirements. Medtronic also there. Its 200-day and 50-day moving averages are above its current price at $84.22. Cardinal Health is now at $46, having been driven down for the past several years. So you can see here in 2019, after that Christmas Eve, it had a quick drive up to the highs. Basically, its resistance here is the last time, and then just kind of fell and fizzled, now down at the $46 point. And then we have AbbVie down here again. So you can see that every single one of these four companies is currently trading both below its 200-day and 50-day moving averages. Now, if you would like, we can take a quick look at its, what was it? I wanted to take a look at their return on invested capital. So if we take a look here at Walgreens, their return on invested capital over the last several years has been increasing. So this is something you like to check here. So between 2013, 2015, 16, that was a bit of a rough time for just about anyone out there. So Walgreens was down at a about 7% return on invested capital. So however much money you were invested into that company, they were able to turn around and invest it into their company and generate about a 7% return. Now, currently, Walgreens is doing about a 12%. Medtronic is at a 6.46. You can see here that one of the reasons that they may have been driven down in price here was because of the return on invested capital had dipped from back in 2014 down below that 10% return, and investors are losing a bit of confidence here. I recently jumped back into this one. I do see it sort of kicking back and maybe jumping back into the sort of a better opportunity kind of going forward. So this one is offering, they have a return on invested capital currently at a 6.46. Cardinal Health, this one kind of negative there. So this one I may have to reconsider. I have to look at this one just a little bit more and do a little bit more research. You know, there's always little weeds in your portfolio that grow, and that's why keeping a trimmed down portfolio where you can kind of dig into specific ones may help. So this may be one I need to take a little bit of a further deep dive into. And AbbVie here up at 15.25 for the return on invested capital. So of these companies here that are currently down into the portfolio, we have AbbVie down 15.65%. We have Cardinal Health down 9.03. We have Medtronic from our initial buy point. We only have very little equity involved in there, $37.89. That is down 6.66%. And we have Walgreens currently there. I have been pumping into Walgreens the last few weeks. We're at $265.56. So that is at negative 0.62%. So it has been increasing recently. So I'm actually going to be, I was going to be taking a look here at AbbVie, Walgreens, Medtronic, and Cardinal Health, but I want to do a little bit of research into Cardinal Health, so I'm going to be removing that from my picks here. So the three stocks that I'm going to be buying this week are AbbVie, Walgreens, and Medtronic. Walgreens, I believe it's still a really good valuation. While it is still it has been recovering lately, I still believe I would like to continue building up that portfolio along with Medtronic. So we're going to go ahead and move into those specific stocks. So I'm not expecting any new dividends to get paid out into the portfolio. So every week I add, let me bust out my handy dandy calculator. I add $115.38. And we basically have 1 penny there, so that's just $115.39. I divide that by 3, so I'm going to be putting in $38.46 into every single one of these stocks here. So the three stocks that I'm picking are AbbVie here, and I'm going to go ahead and select it, do a buy sell order, select buy, and punch in here $38.46, and go ahead and hit continue and confirm. And the next stock here, besides AbbVie, the other one here was Medtronic. So again, kind of glide down here, look for Medtronic, select it, and go ahead and perform a buy sell. And I'm going to go ahead and put this one at $38.46. And on my last one here, so $38.46 is what I've been putting into this. But what I kind of found out is that I want to, sometimes I get paid out some dividends and they just kind of sit there on Monday. So the way I'm going to be bypassing and making sure that I invest every single penny I can into this specific stock, and just whatever dividends do come in on Monday, you'll see here, I'm going to go ahead and go in here, and normally I would punch in $38.46, but in this case I'm just going to punch in $50. So this isn't going to withdraw more money out of my account than what is going, what it's going to do. It's going to put $38.46 into AbbVie. It's going to put $38.46 into, what was it, Walgreens, I believe, or Medtronic, and then if I get paid out some dividends on Monday, it's going to invest all those dividends plus the remainder there of that $38.46, and it's going to invest everything available into that Walgreens position outside of that 38.46 into the other ones. So that is what what I'm going to be setting up for here on Monday. So when the markets open up on Monday, it's expected to be positive here. We're expected to have about a 0.5% gain, I believe, on Monday, somewhere in that range. I think was what others have been, sort of predicting. But yeah, that is basically all I wanted to cover in today's video, going over the current cash, the activity, what stocks were purchased, what dividends paid out last week, my 3 stocks that I'm going to be buying this week, why I'm going to be buying them, their current valuations and returns over the past several years, and I'm going to be doing a little bit more research on that Cardinal Health one. But I've seen a little bit of news as to they want to turn their pharmacies around into urgent care. So I think that's a kind of interesting turn there for Cardinal Health. Yeah, Cardinal Health. So that is it. Thank you all for tuning in. If you guys are not yet subscribed, definitely hit that subscribe button below. If you did enjoy that video, hit that thumbs up. And if you have any comments, questions, go over anything in today's video, want to drop some information, definitely drop it in that comment section. And I will see you in the next video. Have a great day. Bye.